Thanks for joining us. I'm Marlon Bowling with you, your tour guide to the ag commodities. Well, here we are Thursday, and you know what? That's when we normally get our weekly export sales data from USDA. At least that used to be the deal until about a month ago, and things kind of fell apart after that. Now, today was supposed to be a day of catch-up by USDA, and I don't mean for on a hamburger. I mean they were supposed to be catching up on data, and they did have a dump, let's say, a little bit ago. And let's take a look at the information with help from Brian Hoops. Brian, I actually logged into the USDA site, and you know, normally I would put together a little graphic showing what the weekly export sales data was for corn, soybeans, wheat, et cetera, et cetera. And today I believe I saw like 6 or 7 lines of downloadable data covering, and each one was for a different week, and it's like, I don't even know where to start. So can you decipher this big data dump that just came out, and was it good, was it bad? Does the trade even know what to do with this right now?
Yeah, good morning, Marlon. I think the trade had the same attitude towards you. A lot of this news is actually going to be old news. You know, they combined the last 2 weeks of August into one marketing release this morning. Then the first week of September 1, we saw a marking year high in corn and soybean exports. So, you know, that's pretty positive. Pretty routine numbers for wheat. And then this numbers that came out today for the week ending September 8th, they're pretty much caught up now. Those were back again to routine numbers for corn and soybeans. And I think the trade, you know, maybe had a little short covering off of the marking year high in exports, but we're not going to go anywhere with this. You know, now we're starting to look ahead towards next week's sales. We hope we can count on the USDA to deliver these sales again to us. And we have not had any private sales this week, so we can expect next week's sales to be pretty routine at best. And, you know, you had a lot of information being dumped on the market this morning, including the rail strike being put back, or you know, an agreement being reached so there would not be a strike, and the markets really have failed to pop off of any of this news. I thought that would be a little bit of a positive, and it really wasn't. Just fractional gains in soybeans. So, you know, the market's still trying to digest all this news, but it really needs some news from China in the form of export business, especially to China, to kind of calm itself right now. Otherwise, I'm a little worried this seasonal harvest weakness that we're seeing is going to kind of drag the numbers down. And one thing I wanted to mention that I thought was interesting is we did have deliveries overnight. You know, we went through almost the entire delivery period, and then September grains went off the board yesterday. 322 contracts of soybeans delivered overnight. And that was, I think, a little surprise to the trade, and did put some pressure in the overnight markets before the rail strike was averted and before the export numbers came out.
Well, now that's a bit unusual, right? That means somebody didn't want the soybeans. I thought they were in extreme demand right now.
Yes, that's why I wanted to point it out, because we went through this entire period without any deliveries, which usually is a very good sign that somebody wants those soybeans. And then when September goes off the board, you know, there's a disparity between September and November, about 50 cents or so. Now they put some soybeans back out there. And so, you know, maybe our demand is starting to soften. It's a sign anyway. Demand softening at this time period. It could easily pick back up. You know, a lot of countries will try and buy during harvest, trying to time harvest lows, and that usually occurs in the next 2 weeks. So that's what the trade, I think, is really going to be focused on, is not only harvest data, but can we get some demand data as well?
Brian, when I was going through the numerous items that USDA had to download a little bit ago, I tried to pick the newest one, just going by the file names and everything. And as I printed that out, it says on there, this is for the period August 26th through September 1st. Now, I believe that was the latest one. Does that mean we still have a week to catch up yet?
No, they did have another file for this last week as of September the 8th. So those numbers were pretty routine. Now, the one that you're referencing, September 1, that was a marking year high for corn and soybeans. And during that reporting period, we had some really strong private export sales. And since that time, the exports, private sales anyway, have really quieted down. So this number that this last one for the week ending September the 8th, very routine for corn, soybeans, and for the wheat markets.
Now, okay, you were talking about the marketing year. The marketing year just started September 1st, correct?
Correct. Yep. So it's a new marketing year, but we've had sales for this marketing year for several months now, and those have been reported. But now that the year has actually just started, we're just getting these sales coming out, and as I said, very much a routine this last week, but marking your high as of the September the 1st. But again, nothing real outstanding.
Okay, gotcha. Thanks for explaining that. Now let's review where we ended up in the Globex trade. And by the way, the Globex trade actually finished up a few minutes after this USDA dump came out. Let's take a look at the corn here. We had the December, which is now in the top line. I'm glad you pointed that out. September is gone now. So the top line December is now 2.5 cents higher. We're at 6.84 3/4. So as Brian mentioned, no big ball of fire here, that's for sure. On soybeans, wow, look at that reaction in November soybeans, up 1/4 cent, one tick higher at 14.55 1/4. If that market could have a yawn sound effect, it would be using it this morning. Now, looking at the wheat trade in Chicago, well, we had the December contract going down a nickel this morning. That would put that price at 8.67 1/4. In Kansas City, we're down 2 1/4 on December at 9.44 3/4. And we wrapped up with Minneapolis 3.5 higher at 9.41 1/2. By the way, that December cotton finished up 17 points higher at 102.88 this morning. All right, we'll take a break right here. Brian, we'll come back and we'll talk a little about, well, meat exports, if we can, when we come back. Well, we're so glad you could join us here on a Thursday. I'm Marlon Bowling with you, and I'm joined by Brian Hoops. He is the president of Midwest Market Solutions. Now, he is located in Springfield, Missouri. Now, we talked about the weekly export sales data. Still trying to figure some of it out here that I guess has accumulated over the past month. Now, what did you take away from the information that you were able to glean when it comes to the overall beef and pork export sales for this time period that's been missing?
Well, it's pretty routine numbers. We've noticed that China is a buyer, especially of pork, but not maybe the number one buyer. That is turned to Mexico. They've been a very aggressive buyer of U.S. pork products here recently. This last week's sales over 25 million tons. So I would consider that to be a very good number, a healthy number. The beef sales, again, we saw the month of July, one of the top 5 all-time best sales overall for beef during the entire month, slowing down just a little bit in the last reporting period. In fact, this last week, about 15 million tons. So we're kind of back into where we've been averaging, more of a routine number for as far as sales go and as exports go. We're heavily dependent upon U.S. pork and beef exports as we continue to be. But China is not absent, but they're not the number one buyer right now either.
I guess the overall takeaway here is that there was so much concern about the absence of data, and that China in particular would be able to come in there and just make all these small purchases over the past month, and they wouldn't show up on the nightly reports. And since there was no weekly data, it would go under the radar for about a month at a time. It doesn't appear that actually did happen, though, this time. Is that right?
Yeah, it doesn't look like that's necessarily the case. So, I don't think there's any big surprises coming out of this report for pork or beef. And maybe I missed something, but I don't think I've seen anything so far that would suggest that. So, we're going to put those numbers into balance sheets. We'll start looking at going down the road as far as beef and pork exports. Cash trade is still trying to develop in the cattle country this week. We're seeing a little bit of steady trade, especially in the north, steady to $1 higher. But southern trade, it seems like it's a standoff at this point.
Let's look at the futures on the live cattle board. They finished up yesterday under a little pressure, down 45 cents on October at 144.35. And as Brian mentioned, not a lot of activity in the cash trade yet. October feeders were 90 higher yesterday at 181.42. Of course, the corn had been under a little pressure. On lean hogs, we finished today with the October down $1.05 at 94.70. We'll see what they want to do today. But they were about $1.30 off of their high of the day, pretty close to their low of the day when they finished. All right, thanks, Brian, for helping make sense out of the big dump that we had this morning by USDA. Appreciate that very much. Brian Hoops of Midwest Market Solutions. So, Janet, we'll see what the market thinks of all this in just a few minutes.